What's up everyone, it's SC Mest. The market is in absolute chaos right now. Volatility is spiking. The Magnificent Seven are bleeding trillions in market cap, and we're seeing rare data points we haven't hit in decades. In this video, we're breaking down the VIX explosion, recession signals, and the critical thresholds the S&P 500 is breaching. If you're wondering whether this is panic or opportunity, this is the insight you need. Let's get right into it. Volatility and the VIX breakdown. So right now, volatility is absolutely surging. The -1 is back over 30, the first time we've seen this since August 2024, and that alone puts us in rare territory. Based on my VIX spreadsheet, this reading puts us in the 91st percentile. Out of 8,514 trading days over 30 for years, we've only had 721 days with the VIX above 30. That's less than 9% of the time. If we go above 40, that's only 200 for days total, just 2.3% of the time. This kind of spike usually signals fear, uncertainty, and potential market overreaction. Market sell-off stats and historical perspective. Let's talk S&P 500 and how far off we are from the norm. We're down 6.78% from the 200-day SMA. Historical data shows that we've only been down more than 10% from the 200 SMA 6% of the time in the past 65 years. To get there, the S&P would need to fall to around 5,184. Even more extreme, the low 50% from the 200 SMA puts us at 3,922. That's a drop of 27% from current levels, extremely rare. But if it happens, the risk-reward opportunity would be insane. The Magnificent Seven meltdown. The Magnificent Seven stocks are now down over 24% collectively from their highs. In the last 10 years, 90% of the time they've been within 30% of ATHs. That means this drop is approaching rare bear market territory, especially if we go beyond 30% down. Apple, for instance, just took a 9% hit, the steepest in over 5 years. Market sentiment. Money Vest Index plus fear levels. Right now, the Money Vest Index is sitting at 2.61, but I expect we'll fall into fear territory very soon. The last time we were this low was October 2023, when fear dominated and the market sold off aggressively from summer through fall before rebounding. Recession risks and inflation commentary. Mohamed El-Erian says the recession probability in the US is up to 50%. And inflation expectations have increased to 3.5%. He notes, "I don't think a recession is inevitable, but the risks are uncomfortably high." He also warns that markets are underestimating the inflation impact of new tariffs, and if these aren't temporary or negotiated, inflation could run hotter than expected. Fed Watch plus unemployment numbers. We've also got Jerome Powell speaking at 11:30 a.m. ET. Non-farm payrolls expected at 135,000. Down from 151,000. Unemployment rate holding steady at 4.1%. Analysts are calling this jobs report the final nail in the coffin if it's weak. Tear that with tariff news and rate cut uncertainty, and things could get uglier. If recession hits versus if we avoid, one historical data shows, with recession, average market drop, 35 to 36% duration, 16 to 17 months. Without recession, average drop, 20 to 23% duration, 6 to 7 months. We're currently only approximately 12% off highs. A full 20% correction takes us to around 4,900 on the S&P, which breaches major technical levels and opens rare buying opportunities. Market seasonality. April's weak start. April historically is a decent month for markets, but this year it's starting off rough, already down nearly 4%. Unlike rebounds in 2020 and 2001, we're seeing continued selling pressure for 3 months straight. Opportunity or more pain ahead. With the VIX soaring, rare percentile readings, macroeconomic uncertainty, and technical breakdowns, it's easy to panic. That the rarity of these data points also opens up some incredible long-term buying opportunities. Personally, I'm still deploying capital slowly, watching for further breakdowns to add with a high-risk, reward setup. Make sure you stick to companies with pricing power and strong fundamentals. Those are the ones that will survive and thrive. If you found this helpful, make sure to drop a like, and don't forget to subscribe. We're this close to 1,000 subscribers, and I truly appreciate the support. Let me know your thoughts in the comments. How are you navigating this market? As always, happy investing, and I'll see you in the next video.